Welcome to the deep dive. Today we're plunging into the world of COM7. They're, a really big player in IT retail over in Thailand.
Yeah, significant. And we've got quite a pile of sources to work through for you. Analyst reports think GlobalX, Financia, KGI, Maybank, UOB Kay Hian, KTBST, Asia Plus.
Huang Thai Xpring, Bulong, Nomura, the list goes on. Plus news from the Bangkok Post and various Thai financial outlets, too.
Right. And this gives us a view from, 2018 right up to early 2025. Quite a span.
It is. So our mission today, let's unpack these sources, understand COM7's core business, how they've been doing.
The key growth drivers. And honestly, there's some surprises there. The hurdles they face and, what the analysts are saying about the future.
Okay, let's dive in then. Starting with the basics, the sources really paint COM7 as, dominant in Thai IT retail.
Absolutely. Computers, laptops, smartphones, tablets, accessories.
Yeah.
Pretty much the whole IT spectrum.
And their market presence, their scale, it's significant. I saw one source from 2021 mention a 15% share, but they were aiming for 30%.
And then a 2022 source bumped that target, right? Aiming for 35% within 3 years. That's in a market they estimated at like 150 billion baht back then. Big ambitions.
Definitely. And you can't talk about COM7 without talking about Apple, can you? That relationship seems absolutely central.
Oh, for sure. One source, I think it was the 2021 one, said Apple products were over half their revenue. That's huge.
Plus, the sources say they get good supply allocation from Apple based on that market share. And they run the iCare service centers, too.
Yeah, that Apple partnership is clearly a massive strength. But it's not just brands. It's their footprint. The store network growth is, pretty explosive according to these reports.
It really is. From 662 stores in Q1 2019.
Pushing for 1,000 by end of 2021, hitting 1,200 by late 22.
And a long-term goal of 1,500. That's serious expansion.
And importantly, a shift in where they expanded. The sources note a focus on standalone shops, right?
Yes, exactly. Moving a bit away from just being in malls.
Seems like a lesson learned from the pandemic, Diversifying that operational risk, not being totally dependent on mall foot traffic.
Makes sense. So building this huge network, locking in key partnerships, how's that showing up on the bottom line? The financials look strong.
They do. Across the historical data we have, you see pretty consistent revenue and profit growth. Hit record highs in 2024, revenue over 79 billion baht,
Wow.
and net profit up a healthy 15.7%.
And it kept going, didn't it? Q1 2025 profits up 18%, crossing 980 million baht. What are the sources saying drives that consistent strength?
It seems to be a few things. That store network is fundamental, obviously, but also effective inventory management.
Right, having the right stuff without too much capital tied up.
Exactly. And cost control, some reports mention SG&A reduction, good management overall, plus performance-based pay for employees. Seems to keep the sales teams motivated.
Okay, so that's the solid foundation. But CM7 isn't just sitting still, are they? The sources make it clear they're pushing into new areas. Let's dig into those growth drivers. Store expansion continues.
Right. Plan is for another 120 to 150 new spots. Big focus on their Studio 7 brand, doubling down on those standalone locations.
And smartphones are still huge, naturally. The reports talk about new Apple launches, iPhone 13, 15, looking ahead to 16, 16e driving sales.
And not just Apple. Samsung's Galaxy S24, one source said pre-orders doubled. That's significant.
Any other tech trends boosting phones?
Well, the sources are starting to mention AI in new devices as a potential reason for people to upgrade. Plus, looking ahead to 2025, there's this expectation of a big replacement cycle.
People replacing the devices they bought during the COVID tech splurge.
Exactly. That seems to be the thinking.
Now, this next bit is where it gets really interesting, I think. Their subsidiaries and diversification.
Yeah, this is a major theme. Subsidiaries like Double 7, iCare, UFUND, they're highlighted as, successful contributors.
How much are we talking?
Well, a March 2025 source said those three together chipped in 10% of COM7's net profit. It's starting to become meaningful, shows diversification is actually yielding results.
And what are these successful ones doing? UFUND, that's their leasing arm, right?
Yeah, and it's expanding. Started mainly with Apple, but now the sources say they're doing Android phone leasing too.
Okay. And iCare. Not just service, but insurance now.
Right, developing tailored insurance products. And they're also moving into, the smart home space.
Smart home? Like what?
Partnering with Index Living Mall for appliances, getting into smart TVs, even microwaves. It's like they see IT and home appliances converging.
Interesting. And there's talk of solar cells and cloud services too?
Yeah, longer-term plans mentioned in the sources, really branching out.
But it's not all smooth sailing with these new ventures, is it? That March 2025 source also mentioned some were still losing money.
That's the other side of the coin. Pet tech or retail, Dr. Pharma, Aon. These were noted as still being in the red.
So some bets are paying off, others are still, well, investments needing time. PetPaw and Dr. Pharma sound pretty far from their core IT business.
It shows they're willing to experiment, though. Test different waters.
Okay, let's talk about maybe the biggest surprise in these sources, the move into EV leasing. ED7 feels like a totally different world.
It really does jump out, doesn't it? And the sources pinpoint a very specific target market. Bangkok's taxis, the LPG NGV ones.
How many are we talking?
Around 80,000 total. But here's the kicker. A huge number, like 30,000 in 2025 and another 30,000 in 2026, face vehicle expiry deadlines.
So built-in replacement demand, massive demand potentially.
Exactly. And COM7 isn't just talking about it. They're in a trial phase, rolling out an initial 200 Aeon EVs.
Aeon, that's one of the subsidiaries that was loss-making, right? But they're using their EVs for this taxi leasing.
Seems so. And get this, one exhibit showed that the specific model they're using, the Aeon ES, actually made up 40% of Aeon's total vehicle sales in 2024. So maybe this taxi venture is key to Aeon's own path too.
Interesting link. What about the potential profitability of the leasing itself?
Early days. But one source floated an estimated IRR, internal rate of return, of maybe 10 to 12% for this EV leasing.
Which is decent.
For a potentially large-scale, long-term business like this, yeah, if they can pull it off, it could be a really significant new profit stream. Diversifies them way beyond retail.
Why do the sources suggest COM7 thinks they can win here? Is it leveraging UFUND's leasing experience?
That seems part of it, yeah. The financing side. Maybe also their network for service down the line, though that's less explicit.
It's definitely bold, using their operational and financial muscle in a totally new sector, driven by this regulatory window with the taxi expiries.
A very strategic, if unexpected, leap.
Okay, but growth always has challenges. What headwinds did the sources flag for CRM7?
Well, the big one is sustaining growth in that core IT market. It's mature, replacement cycles might be getting longer.
Right. Everyone has a phone, a laptop. Getting them to upgrade faster is tough.
Exactly. And competition is always there. One source specifically called out AD-Vance as a competitor.
Any external factors mentioned?
Over the years, yeah. Older sources mentioned supply chain issues, a weaker bout sometimes. More recently, early 2025 sources brought up worries about U.S. tariffs potentially hitting IT demand and even risks from fake apps, things outside their direct control.
All right, let's try and wrap this up by looking at the overall financial picture and what the analysts think.
Sure. The financial tables in the sources generally show, assets, liabilities, equity, all increasing over the forecast period, consistent with expansion.
Cash flow improving too.
Cash flow from operations looked like it was trending up, yeah.
And key ratios. How's the financial health looking?
Pretty solid, based on the projections. ROE, return on equity, projected between like 34 and 42%. That's quite strong.
Meaning they're using shareholder money effectively to generate profit.
Right. Interest coverage looks comfortable. They can handle their debt. And net debt to equity seems to be forecast to decrease, which is generally a good sign, improving leverage.
What about dividends? Are they returning cash to shareholders?
The chart showed a history of increasing dividends per share, and one forecast put the yield at somewhere between, say, 4.6% and 5.5% for 2025-2027. Attractive.
Okay, so focusing on that March 2025 analyst report specifically, what was the call?
Maintain BUY. Target price of 29 baht.
And how did they get to that number?
Based on a 2025 estimated PE ratio of 19 times, they noted that's a bit above the low end of its historical range.
And the stock price at the time?
It was around 20 baht, actually. And it had been underperforming the market recently, down over 1, 3, 6 months year to date. So that 29 baht target implied quite a bit of upside from where it was trading then.
Interesting. The reports also mentioned COM7 getting into key stock indices, right? SET50, Seth DAC.
Yeah, SET50 for the first half of 2025, Seth Day for the back half of 2024, and an AAESG rating in 2024. So recognition for size, dividends, and sustainability factors.
One more thing, that share sale to the BTS Group. What was the thinking there?
The sources framed it as strategic. Getting BTS, the SkyTrain operator, big player in Bangkok involved, could help COM7 leverage their expertise in marketing, advertising, maybe their physical locations or logistics network. Another partnership angle for growth.
So if we step back and look at everything these sources tell us, this whole journey, what's the main picture?
We've got a company with a really strong established base in traditional IT retail. Massive network, key brands, solid.
But definitely not standing still.
Not at all. They seem to be actively, strategically tackling that mature core market by diversifying. Some moves are related financing services, but others are bold leaps. EV leasing, solar.
Trying to balance that core strength with placing bets on the future, it sounds like.
Yeah, precisely. Leveraging what they have, the capital, the operational skills, the customer base, perhaps, to find new growth areas. Even if, as we saw, some of those new bets are still costing money right now.
It really is a fascinating evolution to watch, and it makes you think. As technology keeps blurring lines, IT meets transport, meets home, meets finance. How does a company built selling devices adapt? How does it navigate a future where services, connections, maybe even mobility become just as important or more important than the box itself?
That's the big question, isn't it?
What does Kio M7's strategy, looking at all this evidence, tell us about where retail itself might be headed in this tech landscape that just keeps changing so incredibly fast? Something to mull over.